The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with him. With what? We've got a confused engineer in the room. He doesn't understand what's going on. Anyway, 2020 on the S&P cash, we're off 33 points as we speak. Got to a low of 2014 on the S&P cash. Volume is tepid at 2.5 billion shares. And kind of surprised that we're up here at this level even now. A little bit more volume it came in, but it was pretty dry, probably through 11 till about 12:30. Volume picking up a little bit, but still going to be very light. And, of course, pretty standard on a Friday. But it is what it is. It is down. Volume is not expanding especially. I'm going to say the index volume's okay. I'm going to say that volume in individual stocks is pathetic. And I'm going to go back to my call back in September where I did nothing but 3 days of talk about stocks that had light volume at the lows, and we got that rip on that Friday where the market literally turned around from about 1890 and closed at 1940, something like that on the day. I think we can we're kind of set up for an identical move coming very soon. And I think we could get all the way back up to 2100 on the S&P cash before next Friday. So I am keeping my powder dry and watching these markets closely. But anyway, we've got, somebody in the den's bringing it up. Everybody looks at volume. There are two different kinds of volume. One is the complete New York Stock Exchange volume. That is every ECN and the volumes everywhere else. And then there's the floor traded volume. That's the smaller one. Many times you will hear people talking about it as 600 million or 200 million or whatever. The volume that I give is the total volume, no matter where it was traded. So the question is whether or not there's any disparities today between that. The disparity I see is just the incredible lack of volume in the individual stocks themselves, which suggests, again, this is a big move that is being pushed in the ETFs and in the indexes, but it has not trickled down so far into the individual stocks that I'm looking at. And again, I'm going to be probably having tons and tons of stocks in my newsletter on Monday morning that have tested at previous lows on an extremely light volume. So we will see that again. Now, we did that, for about 3-4 days before the market really turned around in September. But I could see that happening too. Some of the other things that make me think that at least some of these sectors are not going much lower was and is the calls on the IBB. I thought if there was a sector that would fall out of bed as it came down, it certainly would be the IBB today. So I was looking at these 330 calls all day long, and they've been in about the $3.50, $4 range for a while. And my notes have the things probably worth about $2 if this market was headed lower. So kind of a big disparity out there. Now, again, maybe we see this market open up on Monday, and I'm not buying the close here today, by the way. But I continue to see a lot of evidence that would suggest that a lot of people are not thinking that they're throwing the baby out with the bathwater just yet. We're at 322, and last time I looked, let's take a quick look here. I've got to pull these up. I've got to do my music while I talk. But that's it. The expiration. bring up those. Okay, and where's my IVB? So yeah, last trade on those was about $3. Still should be about 50 cents, maybe 70 cents lower on those. If a lot of people were thinking that the baby was going out with the bathwater on the IBB. Anyway, we're going to get into a great deal of those. We're going to start looking at some of these charts. And again, the volume is not in for the end of the day. But again, a lot of what I see is going to be very light volume in a lot of equities. And we had the same thing in that September, which is all the volume was in the indexes and the ETFs. And then we had that rip your face off rally, which a lot of people would think, and maybe even could make the case today, was a counter rally. All the way back up eventually to, of course, above 2,100 on the S&P cash. But we will be looking at more of those as time goes out. Now, we talked on Wednesday on me actually starting to buy some calls in the market. We talked about yesterday how the premiums on those calls continue to fade and never really found a floor. And that's why I wanted to see some kind of strength finally in those. My guess is that at least some people on Wall Street already knew because it wasn't following the indexes. It was following something else. And that was my first indication that I wasn't ready to pull the trigger yet on these. But even if we go back to a little over a year ago on the massive move that the October expiration cycle had, we were being driven down all the way till Wednesday, and of course that I think it was about 1922 that went to $2,000 in what, a day and a half, something like that. I still think that there is a very excellent case to be made that you can have that. So could we go down all the way into Wednesday on the indexes? I don't think so. I think we're probably going to find some kind of low, maybe Monday morning, or maybe at the open on Monday. But I think we're kind of very close, just based on just how light the volume is in a lot of the equities I'm looking at. Anyway, we will persevere. And in the meantime, it's time to get this party started.
That it's all just a little bit of history repeating.
And it is history repeating. Sandy Lerner and Leonard Bozak, two professors in different academic departments at Stanford, are frustrated by their difficulty in communicating by computer. They found Cisco Systems to make improved network switching equipment. And of course, eventually, that stock would go on to have more shares than there were people on the planet in 1999 before the dot-com and the that whole dark chapter in America flipped over. But that's it. Oh, I forgot to say, and I didn't put it in my list of stuff, but if you haven't seen the ads for it yet, I think I played one. I may even have it that I'll play a little bit later. But it's very kind of interesting to see our stock market actually make it to the big screen. But the Big Short comes out tonight on most theater screens. And I'm a big fan of Rotten Tomatoes, if you don't know that site. Very good site for reviews on whether markets are good or bad. And I like it. They're not always right, but generally if the thing gets about 25%, that is a pretty good indication that thing stinks to high heaven. If it gets a 70 or 75 above, probably I may check the movie out. But this one's getting about an 87 when I looked last night. A lot of big name stars in it. And of course, it's all about the fiasco in 2008. And I kind of wonder just how much the reminder of it today is on the psyche of traders also. But interestingly, nonetheless. Anyway, tax and spend our way to wealth. Just thought a few of these things very interesting. Finland has become the latest country to propose a basic income for all. If put to practice, the scheme would eventually see all Finnish citizens receiving a $800 stipend per month tax-free. Now, that all sounds kind of, interesting, except what the truth of the matter is, of course, is that a lot of those Norwegian companies make huge amounts of money off of the North Sea crude, and that is coming down. So what they're actually doing is giving everybody a stipend, whether you have a job or not. But this would cut a lot of people that are on welfare from about 1,200 euros a month to this $800 800 euros a month. So it's kind of very interesting to see that we don't have the only government that basically says we're going to give you a bunch of cash, when in fact they're actually taking it from the people that they're saying that they're giving it to. Anyway, most of those have a very Western socialistic democracy kind of market, but the cut in crude revenues and cash to a lot of those are making even countries like Finland have to give up the practice of socialism and actually cut a lot of people out from, like I said, 1,200 euros a month to about 800 now. And once thought the unthinkable, socialism is running out of money in some of those countries. So keep tuned. Another thing I thought was very interesting today in the news, I saw this from Goldcorp, and their mine down there in Mexico is having a lot of problems. Goldcorp is a listed company, but its residents say the $3 million the community receives annually has seen rival gangs enter the area to extort workers, contractors, and landowners. But apparently, it is getting even worse. And I don't know if this is like new news or old news, but I always kind of think that it's interesting to watch. You don't just have political issues in a lot of third world countries. You have real issues with, especially in Mexico, in mines like that. I don't know if it's a problem. Maybe Tom O'Brien will comment in the next hour on it. And lastly, the year. A lot of people keep talking about the shrinking middle class. Well, we can actually put numbers to it. And the income as it's defined is about $42,000 to $126,000 for a household of 3 in 2014. Well, guess what? The middle class did actually shrink by actual measurements. So it's not just something that the politicians have been talking about for a while. It actually has happened. We have a lot more people that are in the lower section and a lot more people in the upper section. If the goal of politics and the people in power over the last 4 to 6 years has been to make the middle class grow, they have failed immensely. Anyway, it is a mad market, and no more madder than today. Mad as a hornet. Anyway, let's check back here. So I see 2023 on the S&P cash off 28 points, 2.6 billion shares. Again, to break out this low, I would look for about 5 billion. We're only about halfway there. See you on the opposite side of this commercial.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Oh, wanted to go to charts. I probably should have some charts up. You can give me a call at 877-927-6648, or you can post a message in the den as you would like. Anyway, 2020 on the S&P cash off 31 points, kind of bouncing around at these lows, 2.6 billion shares. Again, to really bust out these lows, probably looking at something like about 5 billion shares, and we're at 2.6 billion now. And that is the total volume of all shares traded everywhere, not just on the New York Stock Exchange tape. So we'll have to see. But, 4.75 billion, something like that. So at least for the moment. Now, it is not uncommon to see Fridays come in with light volume, only to have more volume come in on Monday. But right now, as it stands, we are out here on incredibly light volume on the New York consolidated tape, and on individual stocks a great deal. But as Mr. Keynes used to say, markets can remain irrational a lot longer than you can remain solvent. And I am not waiting or trying to pick the bottom right here. I think I have a much better chance probably on Monday. And we'll be looking at that. 2.65 billion shares. So I wanted to look at a couple of stocks, of course. Why did that did not come through? Anyway, first one I wanted to look at is Apple, and then we'll get to others. And if anybody else has a call. Anyway, we are down, at least in Apple, testing this gap up. That gap up actually happened on the 18th of November. We had 46.7 million shares that day. Today we've got 31.8. So figuring we've got an hour and 30 minutes, and that is the last part of the day. I'm going to say 38 million shares. So we're probably going to be about, 8 million shares light on this gap up from the 18th. Does that mean we don't go down and tag the 111 already? I don't know. A lot of negative sentiment. I wrote about it in the Tech Insider about Apple today. I still think that one rallies, though, next week. What else do we have out here? IWM. Some people talking in the den about the volume on that. So let's take a quick look on it. Same kind of pattern out here as Apple, in that we had a nice gap up. This one was on the October 5th, 45 million shares on the IWM as that gapped up. We're into that kind of with 34 million shares today. And figuring maybe 38 million shares. Look like maybe 40 million shares. Look to be about 5 million shares light. And that is going to be interesting. What is probably more interesting to me right now is that since the November high on, November 30th high at 120.07, the energy down has actually been extremely good and much better than the move back up here on November 16th to that November 30th high. Anyway, a couple other ones I wanted to look at out here. I'd been looking at this. Easy. I just didn't have a good handle on it. We've played this many times out here on the in the daily newsletter, The Path of Least Resistance, and that's been this emerging markets bear move, and I just never could get a good handle on it down here at the lows to buy it. So as we like to say, of course, a lack of opportunity is better than a loss of actual capital. And but this one gapped out today. Now, what it hasn't done is a lot of volume, and this one's really interesting me because this thing did cap down. It gapped down on 956,000 shares back on the September 30th, last day of the month there. Now, when we're into that, this is where I'm starting to get, especially in a lot of these ETFs, a little bit nervous about thinking that there's a lot more downside. That is this super light volume of just 528,000 shares compared to that 956,000 shares back then when this thing gapped down with all that energy. So we're back into that gap with about the half of the volume. Now, I guess you can probably make a little case in that the big move here today was based on a great deal of movement in the Forex for these countries in the emerging markets, and their currency really starting to fade. We will be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. So let's look at some of the other FANG stocks and see how they're doing today in FLX. This is what I think these things are going to roll over, which is really going to be the test of the market top. The problem is that Netflix is August 5th high being tested just last week. It came in at 26 million shares. So what did we come in September 7th at 26 million shares? So I would love to see this market roll over, but I suspect it's going to have to be on lighter volume on some of these other stocks. Amazon also. Now, why these things are coming back into their trading range, I would like to see a whole lot less volume up here at the high. November 11th, 675.96 on November 11th, 5.3 million shares. Did come in with lighter volume on the 2nd of 5 million shares, but pretty much close to a statistical dead heat on that one. Of course, it's come back in and down a little bit, but no real volume yet today. And that's why I have a feeling that maybe with the very light volume that we're going to have through the end of the year, that these things can creep back up and then maybe tag something like the Amazon high with 2.5, maybe 3 million shares, setting a high in some of these FANG stocks. So, in fact, I haven't looked at Facebook for a while. Now, Facebook had a big move I was never impressed with the earnings when that came out. This thing came back on that fairly quickly. But the earnings were on the 5th of November. Now this thing's done nothing but go sideways in a consolidation move. Again, this is another stock where I love to see the 110.65 from November 5th tested with light volume. That is a high volume high. I'd like to at least get into that candle somewhere with a lighter volume to see that. And even if we have lighter volume or even heavier volume this week, you'd like in the bounce in these FANG stocks to see these things at least come to be retested before the markets really kind of start to roll over big time. So those are a couple of the reasons why I continue to think there's problems in River City for wanting this market to actually crack before the beginning of the year. MSFT. We're going to look at Microsoft next. Now, this thing, of course, had blowout earnings. No one was looking for. Again, it's kind of meandered its way up, down today a little bit. But, is it really? I mean, this thing's been in a pretty tight trading range of about $1.50. And I'm not seeing a lot of people rush to the exit on this one either. So we continue to have an issue where I think when the market's going to fall, we've had a lot of stocks that have already lost huge amounts and huge percentages out there. But the indexes to really roll over finally need to see some of these big stocks finally crater. And I don't see that just yet. Intel Corporation's probably a little closer to most in that they are back up at least to some level of resistance. This gap down on the 27th of January, so we're almost a year into this. That gap down has been resistance for a while. Tried to get into it on May 29th and again on October 23rd with about 42 million shares. Again, just a couple of days ago on December 2nd with 41 million shares. So volume really hasn't shrunk as we've come back in there and hit that high time after time. Now that 58 million share down day on the 27th of January continues to be resistance, but we're down today, and you'd really like to see volume really increasing. And what do we get? 12 million shares today. So this is why I continue to think maybe we've got a good opportunity to see a nice little squeeze. Maybe it starts on Wednesday. Maybe it starts a little earlier. Maybe everybody's on one side of the boat. But I think we have a market that is infinitely able to squeeze and have a massive amount of movement this coming week. What's to say that you got a $2 or $3 move in crude? What would that do to the overall indexes as some of those are getting actually crucified today? One that I did see in that was Valero. Now, this is one where we're actually starting to see some volume. I brought this up a week ago where we were seeing finally the volume tested on lighter volume. So I will give you this one for those people that are of the bovine persuasion. August 13 was $71.50. 8.9 million shares, got into it with 5.7 million shares. A good test of the high and on significantly lighter volume. The downside on this, again, is that the energy was just a little bit more up and stronger from the October 20th low to this November 24th high. I would have liked to see the energy in that leg really kind of come out. That makes me think that maybe we could have one more move up here and even lighter volume. And going into the end of the year, especially probably after the FOMC meeting, this one may be incredibly tough to not see the highs once tested again, and that time maybe on infinitesimal volume, and I'll be ready to pull the trigger then. Okay, what else do we have out here? Did I get my, I would check my email. Let's do that very quickly. You can always email me at path@tfnn.com. Sometimes I forget to check it. Hopefully it's coming up somewhere. There it is. And we will take a look. I think we'll probably have a couple of them in the basket. Certainly do. I own puts on the RSX. RSX. Closed half my position with a good profit today. Just looking for your thoughts on whether this will get down to the target of 14 bucks if it finishes. And man, talk about actually one that looks good to rally. You've got a couple of gaps where this thing gapped up on big signs of strength. This is on August 27th. This is the Market Vectors Russell ETF, by the way. This thing gapped up. In fact, gapped up very well on the 27th of August with 32, we'll call it 32.7 million shares. Came back in, filled that gap with 13 million shares, and then rocketed back up again on that October 2nd low. It is kind of rolled back down here, but even that low that we rocketed out of here on the $15.04 low that had 13 million shares, we're into that with 5 million shares today. Especially the last 3 days out here in this. And this gives you an indication why I am not horribly bearish for the next few days coming out here. But yeah, I mean, just look at the volume, 5.5 million shares. If this is correct, I think maybe this is the best indication that you've got some kind of low, at least in the Russell. It kind of led us down. Would not be surprised to see that it bottoms first. But you are down there on very light volume. You want to compare it to that gap up of 32.6 million shares, or the first test on October 2nd of 13 million shares. 5.5 million shares is something that we call here on the Power Trading Hour as wimpy. And it's not hefty, it's wimpy. Anyway, I would take the cash and I would run. Anyway, what else do we have out here? And congratulations on a good trade. What else do we have? We got two more people. I want to hear your music. A couple other ones out here. And maybe we'll get to those at the end of the show. Again, you can call me at 877-927-6648. You can email me at path@tfnn.com or post a message in the den. Let's take a couple look at some other stocks of interest. Wanted to see how Broadcom was faring out here. And not much movement in this one. There are a few out here that are hanging at the highs. Now, this is the one that I was hoping would give a good indication. I mean, this thing is into a high of 61 million shares from that May 27th spike with no volume, 8.3 million shares yesterday. But again, pulling back on about 2 million shares out there. And I don't know what else you can say about that. Don't like the volume. I mean, certainly wouldn't be going long here. I mean, if you just look at this from the gap up on the 3rd, it's gone sideways and the volume has decreased pretty much every single day since then. But no room at the end for that one for shorts. Boyd Gaming is another one. This one's back down to where this thing actually did break out. And not a bad looking pattern out here, and maybe even a bottom on Boyd Gaming. BYD is the symbol on this guy. It did gap up with a sign of strength. I would have liked to see the candle a little bit better than this October 23rd pop on 2.8 million shares. But I certainly have to say that we are back into that with less than 1 million shares out here today. And again, like I said, I have a feeling that I will be able to have a horn of plenty, an embarrassment of riches of stocks like this come Monday after I do my scans. Barracuda Networks. This one has been kind of hammered down. Wanted to see if this one lost its cookies today. And it does have a low out here of high volume, so I wouldn't touch it down on September 30th, $14.77. And you got to figure that is going to get tested. But, you got 130,000 shares out here on Barracuda Networks compared to its November 23rd low at 1 million shares. So maybe this thing just isn't ready. That's why I'm thinking a few of these things could drift a little higher into the end of the year and really have some nice setups. One of the ones that I've been trying to wait for back here and buy is LinkedIn. It had its sign of strength on the 30th of October. It went up on 5.6 million shares. I would have liked to seen the candle a little bit bigger out there, but what the heck. Went all the way to 258.39 on November 12th. It's had a very, very nice and low volume pullback all the way back into this gap. I just need this thing a little bit lower back into maybe 225 to make this thing set up. But no love at the end on this one either for the bears today, pretty much going sideways. Micron, some very interesting developments. I wrote about it in the Tech Insider today, but this is finally coming back and testing two previous lows. Not quite there. We're probably going to see that in the next couple of days, I would hope. May have a nice setup for next week's expiration. But of course, the high volume low was August 24th with 54 million shares at 1350. It came down, didn't fill all the way on the 30th, but boy, the volume shrank to 30 million shares. Today, 15 million shares. And again, like I said, a plethora, a horn of plenty, an embarrassment of stocks at lighter volume at lows. Not all of them, but some of them. Taiwan Semiconductor, another one out here. Wanted to see how this one rolled. This one actually was one that got into its previous candle with significantly lighter volume. Wanted to see how this one was down. Not a lot of volume increasing in this one today either. Looks more like a trading range from the last low of November 13th, but started off with a November 4th high at 2366 with 14 million shares. Got into that candle December 7th, a day that will live in infamy, at 2350. Did not hit the high, but only got 10 million out of the 14 million shares. It's been coming back down. Volume rarely never increased. The best day you had was 8.6 million on the way down, but today, 7 million shares, so maybe we make it to 8.2 million shares. Not a lot of pressure so far in that one either. VRSK, which is Veridisk, if I was going to short a stock, this would have been the setup to do it, but I just didn't get the feeling that this one was ready to go either. I'd love for this thing to get back up to 79, maybe at the last couple of days of the year, and fill just a little bit more of this gap down. This is an incredibly bearish chart. On the 28th of October, it came down on 7.4 million shares, got into it with 2.1 million shares back at 77.28. And, of course, a little pop back down. But, man, most of these are getting right back and filling about half that gap and then giving it up. And that's why I still need about 79 bucks on some of these. And I'm hoping the very light volume as we go into the end of the year means that a few shorts cover and we get an opportunity to actually pull the trigger on a few of these before it happens. IXIA, or is it LXAI? I think it's LXAI. This one kind of interesting, really heavy hammer down on the November 4th low, 1.6 million shares. Did pierce the low yesterday with 1/3 the volume, a little less than 1/3 the volume, with 430,000 shares. Actually up on the day out here. And I want to remember what this particular stock does before we go to break. Provides application performance and security solutions to organizations in the United States and internationally. Offers hardware platforms as a chassis interface cards, generate, receive, and analyze various traffic types. So hardware security, looks like. Optimized tools. We'll be back in a minute. Give me a call, email me, post a message in the den.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Anyway, we are back. And not a well-known stock out here, but kind of interesting to see a lot of these out here that are testing previous lows on pretty light volume at any best thing. I had a very good question in the DIN, and let me go back here and read it. Any option strategies next week for situations where both puts and calls are loaded with premium? Of course, you could always sell both and wait for them to decay. But I think the volatility is probably going to start coming out on Monday. There are some stocks that have a lot of premium in it, and ones I'm looking for. You also have to have a pretty good setup. And as I said before, I want some natural buyers in the next couple of days. That means I want stocks with huge short interest that can actually turn around and force a lot of people out in a day or two. and keep them on the wrong side into Friday. And I think we've got this a really nice setup for that. Doesn't mean I will be right, but I will guarantee you the risk reward will be absolutely fantastic if things continue to develop as they have over the last couple of days. I only have one position on my daily newsletter, and on a horrible day like today, I like the way that it's performed. It did come down with the rest of the market, but my guess is that they threw everything that they had at today. And in fact, there was some spineless weasels. And there's some show on TV called The Cake Boss. And I didn't know you could just make yourself boss of a particular sector or even a food group. Maybe I should just be calling myself the market boss. I don't know. Anyway, the interesting thought to me was that I was out here kind of bottom fishing in this one stock, and we're still up in the newsletter on it. But it was interesting to see that this stock had come down off its highs about 90%. And what did we see today with the markets getting hammered? In their infinite wisdom, a bunch of spineless weasels, the skunks, finally decide after it's come down 90% that today is the day you should sell it. That they're issuing a sell signal on it, which if there could be any more self-serving reasons to say that, or good signals to say that it's time to go long, probably that. If they've been wrong 90% of the time, maybe it's time that they turned around. Well, as market boss, I'm going to have a new thing, and that is I would have a thing that if you did something as stupid as that, which is issue a sell signal after the stock had already dropped 90%, that maybe they would tie you to a pole in front of the New York Stock Exchange, and you would be able to be kicked by any trader around. I'm told I'm the tech boss. Maybe that would be it. The tech boss. I don't know. Not a good nickname. Not the big kahuna. Not any. I'm going to have to come up with a good name. Anyway, we went through a list of these stocks out here today already that come in with light volume. And, is this going to be probably a bad close? I can't imagine it being a great close. But I think we could probably see that a lot of people positioning themselves for the FOMC meeting on Wednesday have done so. I could also see a lot of people that are scared by the bond, not hooligans, what would you call them? The bond, the scary bonds guys probably have flushed out, and probably the easy money is over to the downside. I will be looking for the rip your face off rally next week. In the meantime, I'll see you at the bottom of the hour, late in the next hour for the Tech Insider. See you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.